Good morning, everyone. Good morning and happy Tuesday. As usual, we are going to get started about 2 minutes past the top of the hour here, so in just another minute or so. Hopefully you guys can hear me. Okay, let's get started here. Okay. All right on time. Good morning, everybody. Happy Tuesday. It's Tuesday, May the 27th. I hope everyone had a bit of a longer respite from the markets. Not a whole lot happened yesterday. We have an up gap in equities this morning. We can quickly touch on that. But my name is Serge Berger from thesteadytrader.com. This is our Set the Market morning call. We're going to spend the next 10 to 15 minutes together going through some of the top things on my notepad. I would encourage everyone here to also take out a notepad so you can follow along. If you are new here, welcome. It's great to have you here. As always, everyone, please give us a thumbs up like to the video. It really helps us get the algorithms recognizing our show. And also, please, very importantly, subscribe to our channel. That way we can continue to do this show. Otherwise, we will have to shut it down at some point. And also, of course, very importantly, maybe more importantly for you, is that it's going to keep you updated in real time when we go live with analysis news. We've got an amazing podcast, by the way, that'll be uploaded, if not today, I'm going to say tomorrow. Absolutely fantastic. Once it's out, it's a video podcast. You will be hearing from me as well, and we will be talking about some of the content that we covered in that podcast. So look out for that one here soon. If not today, I'm assuming tomorrow or so would be when it goes live. So top few things on my notepad were some of the top things. I do want to talk about the stocks first. I always like to do stocks first because most people only care about stocks. That's a problem, but I digress. I do want to talk about what happened last Friday in uranium, copper, what continues to be a frustrating tip for me, which is silver. I have an update on gold. There is a penny stock, stock, gold and silver stock. And note that I usually don't talk about that stuff, but it's an interesting one. If the whole complex goes higher, we will be talking about that. And then I want to talk a little bit about the equity market here. So let's start off with that first. And then in about 15 minutes, we're going to meet over in the weekly Inner Circle of Market Rover member session, where we'll be talking about one particular stock in detail that I think is very bullish. So we'll talk about that in about 15 minutes over in the members webinar. Kevin is asking, where will the IT be located? I'm not quite sure what the IT is. If you can maybe elaborate on that, I will be happy to tell you where the IT be located. Once I know what you're talking about. Okay, so let's first talk about the equities first. And again, that's just typically where people are focusing. So let's talk about this. So one of the main things that we continue to reiterate is that this is a trading year, right? So the year of the trader. I've talked about it countless times year to date. I'm going to continue to mentioning it, to say it a lot this year, because we are in a trading year. And so what that means for me personally is I need to be very open-minded as to what might be the next outcome. Right now what we had a very sharp retrace again, and I can tell you from my circles, the hedge fund community, people that have done this for 20, 30 plus years, this is once again not what's normal, right? That does not mean you have to be bearish, but we do need to understand what's the driver behind the rally in the S&P 500. So let's quickly talk a little bit about where we're at on equities, if we can go higher, if what the downside might be in the near term. So I think that's probably a good starting point. So let's start off with that, and I'm going to quickly draw in our overhead resistance or froth zone that we highlighted here for the past few weeks, which is this area that I just highlighted. This is the S&P 500, the SPY tracker ETF. And again, I do think naturally we're going to see some sellers up here, because that's where a lot of people got long after the election, a lot of exuberance, and you can see so far we're stalling. Now, here is the trouble with getting too bearish up here. The reason why equities actually rallied is not because what a lot of people think, right? This is the problem. That's why a lot of people are going to blow up ultimately, whether that's later this year or next year. I don't know. Sorry, let me turn off my phone here. I don't know when that's going to be, whether it's, but it will happen at some point, because the blindly buying the dip works until it doesn't, and then things really blow up. However, the reason it worked is not because everything's amazing and just because dips get bought and things just rally or work automatically. That's not why. The reason why is because we have global liquidity increasing once again. So if you look at last week, you saw the U.S. Tax package and the budget. The spending plan for 2025, we're looking at at least 3% budget deficit spending, probably more. So at the end of the day, that is stimulatory, right? Which was actually certainly not my base case. It was all the rhetoric was that we're going to cut spending, Doge, all that stuff, and sure enough, now that's not happening. That's just in the U.S. though. Remember, we kind of live in a globe. We don't just live in 51 states. Like, it is a huge globe. People tend to forget that. China, right? They continue to stimulate. That's what's happening over there. Europe is stimulating. Don't count that out, right? That's a big deal. Japan, higher rates, right? So there's a whole lot of a whole lot of stuff going on that I think are why risk assets are going higher. Now, you might ask yourself, why is then, for example, Bitcoin going higher? Well, Bitcoin is going higher probably for a multitude of reasons, but Bitcoin very closely tracks essentially, global liquidity. So the more, I'm going to use the simple word here, stimulus, or, money supply and all that stuff, like liquidity comes into the market, the more things go into things like Bitcoin. Ultimately, one of the things, and just bear with me here, this is going to sound crazy because it is crazy. If this continues, we should ultimately see big rallies in things like Dogecoin, which is worth zero, right? Like, there's no intrinsic value there. But that does not mean that it can't be chased higher, because we live in a gambling bubble, right? So the reason why equities are higher, why your retirement accounts, your 401ks, your IRAs, your whatever you live, your accounts are back up to almost all-time highs, is not because dips just blindly, miraculously always get bought. That is not the case. That's, again, why most people will blow up at some ultimately. It's because of this, right? Now, this will stop at some point. There's no doubt. I don't know exactly when that is, but that's what's going on. And that is why, long story short, let me get off my horse. That is why I would not be surprised at this point. And I said more or less the opposite a few weeks ago, but that's why I keep saying this is the year of the trader. We have to be open-minded. A lot of people are not open-minded. They're just lucky that stocks are back up. So they now feel very, 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 very good and very, very smart. It had really nothing to do with that. So I would not be surprised, long story short, if the S&P makes fresh all-time highs in the coming months. I don't know, what the time frame of that is specifically. It's not, I don't think anyone can tell. I'm sure actually someone on Twitter, can tell you, someone with no experience and a laptop trading by a swimming pool and having very huge opinions on Twitter. I'm sure they know. Again, notice the sarcasm. But for the most part, this is not something that I would now rule out. I do think the S&P can go higher, but just notice that it's not for the right reasons, basically, in my view, right? This is just my opinion, my view here. So what I would imagine we could see, and we can get all technical about this, or we can just look at facts. The money flows, the machines are buying. So I would not be surprised if ultimately we have something like this. And then ultimately, we kind of make a higher low, breakout, fake out, and then we go lower, right? Again, I don't know the timing of this. We can, Nicholas is saying here, we can do all sorts of, waves and all sorts of stuff. That's great. Personally, wave counting to me is more of an art than a science, and it's an art that that may or may not work. That's just my view. But at the end of the day, we need to understand what the underlying forces are. And right now, the underlying forces are buying, because we have once again more stimulus coming into the globe. Right? That's what's happening. The machines pick up on that. The machines picked up on the retail blindly buying dips. The retail community got rewarded, not because they're smart. And this is not, I hope this doesn't sound like an a-hole thing to say. I don't mean it that way. It's just because the machines picked up on it and then chased it higher, and then we had more stimulus. So that was the sequence, right? It's not just because 10% dips get bought automatically and everything is always amazing. That is not the case. Unfortunately, again, I don't think that's what people want to hear. And I know, anyway, so that's what's going on here. So I need to be open-minded to fresh all-time highs. Now, I think the big momentum is probably over, though, meaning the next move higher, if we get one, is going to come on less momentum. So I would expect the next move to be not like vertical like we just had, but much more kind of like, like this, right? So over the course of, months. That's my guess. I'm open-minded, but my main point this morning, I just wanted to quickly make sure that I come out front saying, listen, I don't think this is now. The base case for me was always we would get a significant move lower again, whether it was a retest or even a lower low. Right now, that base case to me has been neutralized because of the liquidity and what the machines are doing. So that's just an update on that, right? So next thing now is what happened last week in uranium. And this is, what we've been talking about. If you've been following our themes, whether you are a member of ETF Salo Pro, or maybe you're a part of our Inner Circle group, or maybe you're part of Heat Seeker, I have a very bullish view personally on energy and material stocks. And I think what we saw last week out of the White House on Friday was kind of an opening salvo on this idea that we're going to go full hog on finally making more energy production possible. And so this news on uranium last week on Friday was a big deal. If you look at the right-hand side, this is how I keep track of the major assets that I think that are, there's more than this, but these are, how I kind of keep track of the performance year-to-date of things. The NASDAQ still more or less flat on the year. Polish stocks up a lot, German stocks up a lot, copper, and uranium is now in like fourth place of some of the things I'm tracking. So uranium is now up 18% in the year. Now, I don't know if this rate of change can continue. That is, again, something I would ask you to go find a 25-year-old Twitter guy or YouTube guy with no experience and a big mouth to find. I'm sure they can tell you because of their magical unicorn indicator that they have. But in the world of reality, I don't know if the rate of change can continue. I'm just happy we've rejected the lows, and that we're now back at a point where we've shown that there is a lot of demand for this uranium stuff. So to me, I want to take this very serious. And then, there is a lot of stuff going on in silver and silver mining stocks this morning. Silver once again having a difficult morning. It's down 1.25%. This is the silver. And then we'll talk about stocks as well in a second. But, silver continues to be very choppy. I really thought it had last week an attempt to break out, but it's once again not yet doing it. I need silver to clear. At this point, it probably has to clear, 34.50 at least. It's just not happening, right? So until we get a real move above these levels, silver is choppy and quite frankly frustrating. And I did promise you I will show you one stock that I thought is interesting. And this is literally a penny stock, and you don't much hear me talking about this. It's not a recommendation. It's just educational. If gold and silver, and this is now a bit of a question for me this morning, if gold and silver can hold up here and continue to push higher, then something like USAS, which is a 70 or it was on Friday a 64-cent stock. I don't know. Who knows where it's going to be this morning? It might as well be right back down into the 50s. It's volatile as hell. But just keep in mind that this is the kind of stuff that, if one wants to gamble with a little bit of money, this is something that for fun, and I do want to, mention that this is more fun than serious, something that one can look at. But this would require gold and silver to continue to go higher. The later we get into the bull market stages of these of any rally, the more speculative the assets, the most speculative assets get higher. And USAS is one of those stocks that I would put into that category. Again, it hasn't broken out, but it's looking like it wants to at some point. So I just want to put this on your radar. So that is it for today. In about 3 minutes, I'm going to see you guys over in the Market Rover Inner Circle member session. We're going to talk about one particular stock that looks amazing here using our Market Rover. Also, tomorrow, unfortunately, I have to cancel the Set the Market morning call, this one here, because I have to travel a bit tomorrow. But then we will be back with it on Thursday. See you guys over there in the member session and in Trade Ups a little bit later on. Oh, if you're an ETF Silo member, we have a very important session this morning at 11 o'clock.